So you know that to understand something, you must know the basic accounting terms. So basic accounting terms, the first terminology here, that is the transaction. You know, transactions, it means the exchange. It means an event or business activities which involve exchange of money or money's worth between parties. You know that suppose when you are starting a business, you make the exchange. Suppose you are selling mobile phones, it means you are selling a product. So once when you sell the product, it means the mobile phone, you receive the cash in return or in exchange of the mobile phone sold by you. So the transaction, it means the business activities where you are exchanging money between parties. The event can be measured in the terms of money and changes the financial position of a person. Purchase of goods would involve receiving materials and making payment or creating an obligation to pay to the supplier at a future date. As I told you, transaction, it means that when you start a business, either you are selling product or services. When you sell the product, suppose I told you that you have started a business to sell the mobile phones. So when you are selling the mobile phones, you are receiving the cash in exchange of the mobile phone. So the this is the meaning of transaction. Next, the important terminology, that is the goods and services. There are tangible article or commodity in which a business deals. These articles or commodities are either bought and sold or produced and sold. So whenever you start a business, either you start the business to sell the goods or to sell the services or offer the services to the consumers. So you know the services, this is the intangible, and the goods, you know the tangible. It means the tangible like mobile phones, like laptops, like you can say the table, the TV, refrigerator. These are the goods because these are having the physical existence, and the services, these are intangible in nature. Like you take the services of a lawyer, you take the services of the doctor. When you go to a hotel to leave for a night, it means you have taken the services of the hotels. So whenever you start a business, either you start to sell the goods or to provide the services or offer the services to the customers for a price. Next terminology, that is a profit. It is, you know, the profit, the main theme of the business. You start your business, that is to earn the profit. So here the profit defined the excess of revenue income over expense is called profit. It could be calculated for each transaction or for business as a whole. The word profit, you know, whenever you start your business, the major aim, that is to earn the profit. And when you earn the profit, when your revenue is excess over your expenses. Loss, just reverse of the profit. Loss, it means where your expenses is excess of your income. It is a kind of loss. Asset, you know the asset, like when you are started your business, when you started your business, it means you started with one shop. Then after you thought to make it large. So once when you are looking to make your shop or your business at large scale, then you thought to buy the land, then you thought to construct the factory, then to install the plant and machinery in your business. So assets is mean the resource with which the business generate the profits. Current assets. Assets, this is the classification of assets. Current assets, it is defined. Current assets are those assets which can be converted into cash within a year. You know that to run the business, you need two types of asset. One is the current asset and one is the fixed asset. Current assets are those assets with the help of which you carry out day-to-day activities. For example, cash in hand, cash at bank, stock of raw materials, stock of finished goods. These are the examples of current assets. Even the current assets is defined as those assets which can be converted into cash within a year. And the next, that is the fixed assets or non-current assets. All other assets shall be classified as non-current assets. For example, you can say the machinery held for a long term. You know The fixed assets, it means the word itself telling its meaning. Fixed, it means permanent. Permanent here, it means the for the long term. So those which are not inside the current assets, they come into the group of non-current assets or the fixed assets. So let us take a revision of today's class. Transaction, it means the exchange that you make. Goods and services, goods, it means having the physical existence. Services, not having the physical existence. As I told you, the example, services, it means you take the services of a lawyer, chartered accountant. Goods, it means which are having the physical existence, mobile phones, laptops. Profit, it means where your income is excess of your expense. Loss, it means where your expense is excess in of income. Asset, it means the resources like plant machinery, furnitures, fittings, land and building, books, computers. And this is the classification of asset, current assets and non-current assets. Current assets, it means those which can be converted into cash within a year. Non-current assets, which remains with the business for the long term. As I told you, furnitures, machineries, land, building, these are the examples of uh, assets. Now, let us see the last slide of this particular session, that is the liability. It means when you are starting the business, it means one side you are generating the asset, but on the another side, the liability is also created. Suppose when you take the loan from a bank, you receive the cash. That is the asset for your business. But one side, when you are taking the loan from the bank, the loan is creating or getting a liability for the business. So liability, it means the obligation of financial nature to be settled at a future date. For example, you take the bank loan as one kind of liability, that when you are taking the loan from the bank, it means it is creating the financial obligation on the business that to pay back the interest and the principal amount. And you see the classification of liabilities, current liabilities and non-current liabilities. Current liabilities are those liabilities which are to be repaid within a year, and non-current liabilities, it means which are having the, you can say, the repayment period more than a year, or you can say after a year. It means when you are taking the loan for 2 years, 3 years, 4 years, 5 years, it means in excess of 1 year, they come under the non-current liabilities. So those liabilities which are to be paid within a year, those are the current liabilities, and those which are to be paid after a year or having the, you can say, the payment period more than a year, they come under the non-current liabilities head. So this is the, you can say, regarding the first session regarding the basic terminology of the accounts. You know, the basic terminology is very much important for any subject. To understand any subject, to go in depth of any subject, to analyze any subject, first you must know the basic terminology. So this is all about the today's first session of basic terminology. Now I will say the second session regarding the basic terminology, so that you can get the idea of the basic terminology. So it's all about the first session. Then I will share the second session video regarding the basic terminology, so that you can get the more idea about the basic terminology.